Good afternoon, ladies and gents. Welcome to another video brought to you by Total Control Traders. Let's get right into it. This week, stock pick. We're going to cover some additional tickers as well since we missed our Wednesday video. So let's get right into it. First one is going to be SPX. What's going on in the market? This is what I'm looking at. A descending wedge potential. Now we did discuss about that ABC potential correction down to the 4K. That is still on the table. So what we could be looking at here is A, B, and then C, a breakdown fake out before an actual breakout. However, based on the hold on Wednesday and then the sell off on Thursday, Friday, right now we are in the tightening pattern. So it does confirm that we are in the tightening pattern. This was on Tuesday's low. This was a higher low. And then now we made a lower high. So this is within it. What I'm looking at as well here. 4 hours. There can be another wedge that's going on. Let's see if I can draw this a little bit better. No, it looks the same. Alright, yeah, so 4 hours, there is another wedge going on as well. So this is in a tightening pattern. Once this breaks, not to mention we are nearing that daily apex as well. So this upper trend zone, this lower trend zone, the apex is coming up towards beginning of April. Generally, we don't get to the apex. For those of you that have watched the video, you should already know. Generally, we don't get to the apex before the actual breakout. So that means we gotta zoom in. Looking at the 4 hours, this is the wedge that we're looking at. However, my eyes are just focused on NAS, more so NAS than SPX. Reason is, when we look at NAS, generally NAS moves the market. The wedge, the descending wedge of NAS is getting to that apex a lot closer, a lot faster. And, well, I guess depending on how you draw this, you could draw it to the, like SPX, draw it down to here. Regardless, it is getting a lot closer than SPX. And we know that when NAS moves, it tends to move the market with it. So what does that mean? Let's fix this lower trend zone up a little bit. Right here looks good. Bounce, no touch. What if we draw it to here? That'd be a pretty big zone, eh? It's gonna be somewhere around there. 1, 2, 3. This actually might make sense. Yeah. So we are nearing that bottom, and we can see that the support on the bottom side is a lot wider, so that's not too ideal, whereas the resistance, it's all a much tighter zone on that upper trend zone. So when we look at the sell off on Friday, that was quite the sell off, because in the morning we had a big run at 4 o'clock before the market opened. And then even before the market opened, 5 o'clock it started selling off non-stop. And when we zoom into the 5-minute, we can see there's a 5-minute guide down since pre-market. And then there was a slight bounce to cool it off. And then they finished it off with another 5-minute guide down towards the end of the day. So with this, was that a concern? I'm looking at the volume here. Volume on NAS significantly decreased on Friday. Significantly decreased. So it's not too much of a concern. Again, bear thesis, SPX 4K. Bull thesis, the bottom is potentially coming in. There's no bull divergence to play off of, so keep that in mind. As long as this lower trend zone holds and we start curling upwards, there is gonna be some great opportunities up ahead. All right. Now the other thing to discuss is gold looking like it has topped out. So double top in this double top zone, 2000 and between 2063 and 2075. We got there, huge bearish engulfing candlestick, and then follow through. Now some lower wicks are forming, so we're likely to see what we can expect from here is a hold of the daily 8, form a daily bull divergence. So something like this. Oh. Wrong one. Something like this, making this one a little bit higher, and then there's going to be a daily bear divergence, and then that's going to be an actual break. So this is going to be a breakout fake out if that is the case. As based on right now, volume is falling off, so that's a good thing for the bull market. But if this is were to curl up, there's going to be one more leg down, which will line up with SPX 4K. US dollars still continuing to rise, so that's a little bit good for the bears. 10-year over 2-year 1.14, not inversed yet. VIX is still holding up. We just lost the daily 8. Actually, that's pretty significant. So when we look at this, bounce, come down. This is the money line. We're getting extended on the money line. This is basically a, as mentioned in the previous video, if you don't like the daily 8, maybe use the daily 10. That might work a little bit better on the VIX here. So if you use the daily 10, this is likely a guide up from that daily 10. And now we ever so slightly lost it with a lower wick forming on Friday. It's kind of in the middle. Slightly leaning bullish for the market. Bitcoin, still in that channel. Nothing new. This is still a monthly bear flag. Okay, so keep this in mind. This is a weekly, monthly bear divergence that's playing out. So it's going to take quite some time for this to play out, right? So this is a weekly bear divergence. Monthly, you could say that there's a bear divergence here as well. Very, very strong bear divergence. And as of right now, it's just cooling off a little bit. We are seeing a monthly bear flag. I do anticipate lower prices to come. We did lose the money line as well. You could redraw the money line a little bit lower, maybe somewhere over here. That actually will line up, you know, 1, 2, 3 more months. Over the next 3 months, a little bit more price action downwards to that GP, to that 1-to-1 extension target, to that key zone, to that money line. Quad confluence. This makes sense. Hey, where did my line go? Right, so you see how this one, so this is the 1-to-1 extension target from here. Can't remember where this one is from. This is the most recent 1-to-1 extension target. Lines up with the GP, the bottom of the GP. This is the first drop 1-to-1 extension target. It's all around there. So if we were to move this forward, I can see this having a drop coming down. It's either going to be over here or it's going to be over here. So depending on when it starts dropping, how fast it drops, it's going to be somewhere around there. So we'll call it the middle. This is what I'm looking at for Bitcoin. All right, next one. Let's cover Ethereum. Does it look the same? We haven't. I don't think we've looked at Ethereum too much. Yeah, it's still monthly bear flag. Decreasing volume though. Yeah, significantly decreasing volume. That's kind of interesting comparing to Bitcoin. Right, oil, another one that's potentially topped out. If you look at what is this? Gold. Look at that gold weekly chart. Okay, gravestone candle. Right, there's likely a volume climax kind of candle as well. Looking at this volume climax reversal candle. I think we topped out on gold, but let's look at oil. There's not really a significant volume climax yet. There's not really a significant reversal yet. So when we look at gold then, this is the channel that has been within ever since pandemic. Okay, ever since the pandemic dropped, this is a channel that's been in the whole time. We had a bull break now, and obviously the key thing I'm watching here is the bear volume is starting to very significantly starting to outweigh the bull volume. Okay, on the run up, we saw a huge pop on bull volume on this day, and the next day back test this trend line again. This is the key trend line that we're watching. Why is there a money line over here? Anyways, we'll keep that there. This is had 3 bounces, so when it does come back, let's see if it touches money line again. Anyway, so huge bull volume of bounce and decreasing bear volume. It was a gap up, sell off. And then the next day, bull volume started coming in. Now the bear volume is starting to outweigh. And on Friday, bull volume wasn't really there. That was Friday, right? Yeah. Friday, bull volume wasn't really there. So this is, to me, it looks a little bit like topping out potential. We are trading under that daily 8. Bulls unable to close over daily 8 on Friday. There is, what is this other trend line? Okay, so the previous 2 top out zones The previous two top outs, rejections 115.88, 113.27, those two rejections. That trend line is now becoming a little bit of a support over here, but this is still going to be that key short-term trend line that we're looking at. If it does come back down here, it makes sense that we see another bounce before it comes back down again. All right, so that's oil. Now, I don't have too many hottest picks for you guys. What I do like, let's do two. Let's do two hottest picks, okay? The stock picks of the week. First one's gonna be Apple. Now, the reason why I pick Apple, when we look at this, it's a head and shoulders pattern, potential head and shoulders pattern on, depending on how you draw it, on the daily. Now, you could say this is the left head. This, or you could also say that this is the left shoulder. So regardless, it's gonna change your neckline drawing out a little bit. If you draw it from this as the left neck, left shoulder, the neckline then would be over here. If you use this as the left shoulder, then the neckline would be somewhere over here. So regardless, when we look at this, both have lost that neckline. Right? We have lost it on that gap down as well. It was a straight buy up. And the reason why I like Apple is when we compare it, comparing it to Nas, it is trading on NASDAQ. So this has lost 15% from the all-time high versus NASDAQ. It has lost, I think, is like somewhere around 25%. Let's take a look. 22%. The NASDAQ has lost 22%. Apple is holding up really well. We're going to focus. You know what? Let's do 3 top picks. We'll give reasons for each one of them as well. So Apple, I really like the strength versus NASDAQ. It is one of the blue chips. It is one of the better blue chip growth names. It doesn't offer too much dividend, but when it does pop really well. So let's take a look at the last time it popped. And we did trade, I can't remember if it was this one or this one, maybe both of them. So the money line touch, that was a 27% bounce on a blue chip. Okay. Next time it bounced, it was a 32% bounce over 64 trading days, over 3 months. That's a blue chip, right? Now looking at this cool off. Now when we do a weekly chart, weekly is RSI is getting to 45. We are in that GP again. So there is a bigger picture GP. If I don't imagine that we'll get there. Let's do the weekly. Weekly is a little bit more clear. Yeah, so it would be over here. I'm gonna fix that. It would be over here. Hey. Come on. Okay. What is this one drawn to? Oh, ended up drawing two of them. Okay, so this is the overall big picture weekly GP. And if we were to do the 0.5, I can't see that coming down to 142. And if we were to do the 0.382, ooh, that is exactly where we bounced from on that gap down, hey? I want to see it. Okay, so Apple, as long as we see a hold of that 0.382, I do not see any big concerns. Which the hold of 0.382 would be that big gap down day. We're looking to the on the daily. That is right here. Excuse me. And the reason why I say I want to see a hold of that is we see previous resistance. Okay, 1, 2, 3, 4 resistance over here, and then a very clear support over here. So if we were to lose the GP, does that line up with platinum? Just around that platinum. So it's gonna be around this area that I want to see the chart hold. Right over here around 150. 150 is gonna be the must hold. So if we were to do on the chart, now if we were to do a slow grind down, I'm okay with that. Money line, yeah, I'll be buying. So that's gonna be first top pick of the. We're gonna rearrange the orders actually of this week's stock pick video, and next one is gonna be, let's take a look at Amazon. Hey, big news on Amazon. 10 billion share buyback, 20-to-1 split approved. Gap up in continuation. Slightly continuation. Gap up is slightly continuation. Next day was not a bearish engulfing candlestick. Can't remember if the market. Yeah, market's not really. Markets made new lows though. So if you look at Nas, it made new low on Friday. comparing to Thursday. SPX made new low on Friday comparing to Thursday as well. Amazon did not. There is strength in Amazon. This is very notable. Everyone's been waiting for this. And remember what I said before, that when everyone is anticipating something, it is not going to happen. This is they're gonna wait for like 2 to 3 months. I can't remember when everyone first started anticipating it. I think it was somewhere around here. Okay, more than 3 months. They're gonna wait for a few months. I'll say that they're gonna wait for a few months before it actually comes out, if it actually comes out. So with that, I think there's gonna be continued bullish action on Amazon going forward. We're gonna have full bull confidence on the break of this upper trend line. Okay, let's draw this out. 1, 2, 3, 4, 5 rejections on this upper trend line already. This is the key upper trend line to watch. Now, and there is a strong daily bull divergence as well. Prices made new lows. RSI did not make new lows. That is a strong bull divergence. Now, from here, I'm only going to be bullish on Amazon going forward. I think this one actually might be ranked number 1. We will discuss it. We'll circle back at the end of the video. Now, third one, what was it? Microsoft. How can we forget about that? Microsoft. Come on, man. Bull divergence after bull divergence. Now, this is why we don't really play bull divergence in a significant downtrend of the market, because there's been the bull divergence. There's been a decent bounce. There is scalp opportunities, but that does not mean that it's going to be long-term opportunities. So there's another bull divergence there. This bounce is a little bit less, and we are seeing a very significant bearish engulfing candlestick from Friday. But look at the volume. So it's the same as the nasdaq that we're talking about. So with this, then where are we looking? It's a very similar chart to Apple. Of course, they're both blue chips, right? Platinum. Yeah, that makes sense. So this is the pandemic 0.382, just below the platinum zone. Is there money line? How come there is no money line on Microsoft Drone? Let's do money line. And for those of you that are new to the channel, what money line is, generally you see a reaction whenever it touches this money line. Oh, look at that. Would you look at that? I mean, of course, you can draw it multiple ways, and then there's going to be still reactions to the money line. So I'm going to draw over here. I sort of want it a little bit higher just because of these two areas. Let's see if the wick stays. Okay, the wick stays. Yeah, okay, that works. Yeah, that works too. So it's potentially losing the money line. All right, so we'll call this the money line. There's 1 bounce, 2 bounce, didn't touch. 3, 4, and 5, and we'll call it maybe 6. 5.5. 5.5 bounces from the money line. So with this bearish engulfing, we're going to need to see whether there's going to be follow through coming in on Monday. I am seeing a little bit of positive news. I don't really watch the news again. The reason is, they're all timed. They're all manipulated, right? So the reason why I saw this one is just popped up as I was making breakfast today. It says something about Ukraine is now talking with Russia. And now, the other reason why I'm leaning a little bit more bullish, when we look at the market here, one thing I check every now and then when significant downtrend or insignificant downtrend or a significant uptrend. Look at this, fear and greed index. You just Google it. There's multiple of them out there. There's one other one that actually has different sectors that tells you different sectors, what each one of them looks like as well. Actually, I did take some time to read these every now and then as well, and they all are in extreme fear. I really love that. I love that for an opportunity. And my friend sent me a what are they called? GIF. My friend sent me a GIF there saying, fear of nuclear war. The market is in so much fear. You might as well you put your money into stock, because if nuclear war happens, or if world war happens, which is probably going to be nuclear war, you're not going to need money, which makes sense, right? So when we look at this, 1 year ago, we're in the greed the greed, fear, and index. 1 month ago, we were in fear. Now we are in extreme fear. Really like this area for buying. Even if we were to get if we were to get down to that 4K, there is still opportunity. Remember, this is bear thesis. There is still opportunity to get it down to that 4K. I will be adding. Love that opportunity, right? Breakdown, fake out, right? So that's Microsoft. So if I were to range it or rank them for this week's stock pick, first one is gonna be Amazon. Second one is gonna be how do we forget? Sorry, let me take a look at this. We actually didn't take a look at Google, eh? Oh yeah. I think I might have picked all. Did I pick all FANG stocks for this week's stock pick? Anyways, Google. So let's clean the chart up a little bit. It's been a while. Upper trend line is still there. Yeah, GP's already been lost. Don't need that. Money line is might have to be drawn here. So if we draw money line. Hey, wow. Oh, yeah. I really like this opportunity on Google. Whoa, look at that touch. Bearish engulfing, same idea. So decreasing bull volume, bearish engulfing on going into bearish engulfing on Friday. We're gonna need to see whether there's gonna be follow through on Monday, and we want to see a hold of that money line. So if I were to rank them now, Amazon's gonna be first for sure. Apple, I still like Apple. I think it's a personal sentiment though. So when we look at this, Google is actually a little bit stronger. They are, yeah, I still like Apple more. Apple, Microsoft, Google. Those would be the top 4 that I'd be looking at for stock pick videos. You know, you could probably look at for a bounce play, probably pick 1, 2, maybe even 3 names of the growth names when the market starts reversing, because that is going to provide some great opportunity for the upside. But as for from here going on forward, one of the chart that I wanted to why I'm picking more focus on the big blue chips and maybe even going into Dows more now is when we look at this on the QQQ over DIA. I haven't discussed this for some time now. QQ over DIA, this is a double top, for sure a double top. So meaning that we're losing the money line as well, meaning that the strength is now heading towards DIA, Dow Jones. When we look at in comparison to the QQQ over IWM, this is what happened. Wait, which one am I thinking? Yeah, I think it's this one. Yeah, it's this one. QQQ over IWM. So when we look at this, it's same idea, double top, comes straight back down before an actual bounce again. So let's change this to money line. Yeah. So that's what I'm potentially anticipating. I'm thinking it might happen. And if it does happen, we'll be looking at least the 0.5, maybe even the GP from this last run. Monthly run. Okay. So if the chart, again, these are cycles, right? Whenever market bottoms out from pandemic, the first one, the strongest one, is gonna be Rust, the growth names, and then followed by tech, the tech, and then going the smaller techs, and then going into blue chip, big techs, and then from there is gonna be going into blue chip, you know, Dow Jones, conservative banking is kind of the things. So these are the cycles of the market, and we are seeing, as mentioned before, we are seeing an increase on this. Generally, it happens over 10 years. This time is a lot different. A lot of indicators out there, especially that 10-year over 2-year yield. That's one thing that we're keeping an eye on very closely. It is indicating that this cycle is going to be a lot shorter than 10 years. Meaning, hey, great volatility for traders right now. Going forward as well. So what I'm looking at is this is... I want to see one more bounce. You know, there is no clear. So when we look at the market, there is no clear divergence on the monthly. There's no clear divergence. We want to see something similar to Bitcoin, where, you know, there's clear divergence on the weekly. Daily, there was some bearish divergence, but on the longer term, if we are going into a long-term consolidation like the like the market is telling us, the cycle is telling us, then I want to see that weekly bear divergence, right? So I'm thinking, you know, over the bigger picture, let's do a weekly chart over here. Over the big picture, just to let you guys pick my brain a little bit, this is where my head's at. I want to see something like this, new high, and then it's going to be form a weekly bear divergence. Then that's going to go into a dragged out long-term consolidation, maybe even faster. So that's what my thought is. And, you know, over the next couple of weeks, I think we should get a picture, get a clear idea of whether that's going to be happening, or if this is just gonna, regardless, even if it might be a little bit longer, because we might actually get the breakdown fake out before an actual bull break. So that's gonna take a little bit more than a couple of weeks to actually play out. But regardless, over the next month, yeah. Month and a half, we should know exactly where the direction is going. As of right now, we are still in descending wedge. Right? Alright, so let's get back to the QQQ over DIA. We are losing the money line. Very significant to note. We are seeing now the QQQ over DIA. Whenever you use a ticker over another ticker, the chart is not going to be on point like most individual tickers are going to be. So I do see this as a back test. You know, we did slightly breakdown, fake out, bought up, and then there's an actual breakdown, and we got that immediate back test, and we're seeing a little bit more follow through over here. So that makes QQQ weaker than down. However, if the market is going to bounce as a whole, the market is still going to be bounced. Everything is going to be bouncing, all right? Now, it's just a matter of if the DIA is going to be bouncing more than QQQ, this chart specifically can still continue to go downwards. Okay, that's just something I wanted to discuss. Now, let's get into the tickers requested. $26 minutes in, hey, not bad. All right, so let's get into the tickers requested this week. Tesla, I think that we didn't discuss it yet. Okay, so we are still in a descending channel. 1, 2, 3, 4 breakdown. Five rejections from the upper trend line. 1, 2, 3, 4 supports from the lower trend line. If we were to get down to that lower trend line again, a Tesla, I think. Now the only problem with this, we did lose that money line now. We did lose that money line that has seen multiple supports. All right, so we are trading down under the money line. Tesla, I don't know. I think short-term wise, you gotta at least see a bull break of this trend line. Without a bull break of this trend line, you know, you'd be looking at maybe low risk entries at the bottom, the touch of that lower trend line on the descending channel. Yeah, that'd be a more safe entry. You know, it comes down. I actually don't have any supports drawn down here. It's just one of those charts that continue to go and go and go. Something like this. That would make sense. The reason why I draw over here is I'm just eyeballing it, right? Resistance over here. Some resistances over here. Some support. It became support. Breakdown, it chopped around, and then became support again. You can probably draw a little bit lower. And then these are multiple supports over here. That's why I like it over here a little bit more than lower. Lower wise, you can probably draw a key support resistance. Let's see if it never back tested actually. Yeah, other than that, it's just a trend line up. So this is the only key zone I see. This one is pretty big for my likings. Oh wait, let's see. Is there a reason why I drew it? No, there isn't. Right, so I like this a little bit higher. This is an old zone that I used to draw or drew before. So this makes a little bit more sense. Support, resistance. Yeah, right there is another resistance. Support, support. Yeah, this makes a lot more sense. And it's getting thicker and thicker down as you get down but lower. So if we were to do a log chart. Wait, is that right? Yeah, so if you do a log chart, you know, it gets thicker and thicker down as you go lower. So that makes sense. for a ticker like Tesla. So with this, Tesla, I wouldn't really touch it right now. I like the ticker. I still like the ticker. It's our bread and butter, you know. But right now, as long as this upper trend line is grinding it down, I'm going to stick to some ETFs, some common shares, make it a little bit more simple. You know, don't stress yourself out. The Tesla is gonna provide an amazing play. If it does get down here, 650s, whew, yeah. 650, hey, Tesla's gonna be cutting half, almost, basically. Next one is DWAC. Hey, you're starting to watch DWAC now, Havik. DWAC just lost that money line. All right, so this is I like this ticker because it's been a grind up since the IPO. Okay, huge pop and then consolidation sideways, and then broke bull on this upper trend line, and it just continued to grind. Money line, bounce. Money line, bounce. No money line. Strong, gap down, no money line. I think this is the day that the market gap down, bounce. But now it looks like we have topped out. Huge, significant bears coming in. We did touch that top of the key zone already. So let's see if we get that back test. There's potential for a bounce before coming back down again. So if there is a bounce, this might actually be a good percentage to play off of. 20. That's gonna be a potential 20% bounce already too. So DWAC, you know, it's always on my short-term watch. I still haven't traded it yet. I'm trying to get a feel for it. You know, 33% drop. What is that? 33% drop in 6 trading days. This ticker has amazing volatility. The reason why I haven't traded it, aside from trying to get a feel for it, is when I started looking at it, I think it was already somewhere back here. So if I were to have started trading back here, it basically went sideways, a little bit of pop, and I would have been screwed, right? So looking at this chart, you know, might actually be a decent bottom fish area just for that bounce opportunity, but I still want to get it more. There's no actual patterns. Okay, there's no actual patterns that's clear. What this could happen because it's ran so much. IPO was what, like $10, all the way up to 175. It reminds me of a little bit more like AMC, what's the other one? GME. Yeah, those kind of names, meme stocks, right? So we could come straight back down. That's another 30% drop just to backtest this previous resistance line. Now that we've lost money line, this is the likely scenario. Eventually touch, whether it's going to be from here or we're going to bounce first, like that scenario that we just discussed, right? Bounce first before coming back down. But DWAC, it's losing that momentum. Very significant bears coming in. Volume-wise, not too significant. Ooh, volume pops, eh? Yeah, so something was happening. And low volume, bear volume pop. Low volume, bear volume pop. Right? I think there were news on there. I read something about it, but I can't remember exactly what it was. Regardless, you know, because remember what I said before, that when you look back at a chart, you're never gonna. Most people are not gonna go back to Google what the news was that caused this volume. Just simply looking at a chart, bear volume pop. Those were a little bit of warning signs, and then loss of day 8, loss of money line. There were 4 opportunities, I would say, for you to get out. So with this, you know, if you haven't gone out yet, that's okay, because there's no bear divergence yet. There is still that opportunity that we can come back test before making another leg down. DWAC looking a little bit more bearish to me. Next one is UPST. Upstart in a downtrend. Wow, 1, 2, 3, 5, 6, 7 straight days of selling. 8 out of 9 days red candle. 8 out of 9 days red candle, eh? It's almost like 2 whole weeks of selling. We lost the money line, trading down under the money line. There's no head and shoulders, because we already made new lows over here. So there's no head and shoulders on the daily. Daily, there's potential for a daily bull divergence form if we were to make a new low. So the RSI is gonna be higher low. As of right now, we are still just trading in range. We are still just range bound right here. Nothing really, you know, you just play off of the ranges basically. Volume is nothing significant. So this range is developed from before, where we saw that big pop, rejection, coming back down, support, bounce, big pop, another rejection, and then it goes back up, right? And then we saw coming back down, we saw another support over here. Once we lost it, it became resistance, and then pop again from here. Another couple rejections. So this is just range bound within these two key zones, right? And next one is gonna be, no, we're not gonna discuss SOXL. We're gonna discuss SOXS and XX instead. So with SOXX, potentially losing the money line over here. Friday, a little bit concerning. It is increasing bear volume as well. Bearish engulfing candle on increasing bear volume. That is a little bit concerning. We are right at GP. We're right at the top of the key zone. This key zone must be held. In my opinion, we cannot see a close under this price, 426.73. That is a must hold. This wedge, money line, I think it may have broken bear, but then again, last time we broke down, it was breakdown, fake out, bounced, breakdown on increasing volume. Same with last time. So maybe there is a better trend line to be drawing over here. Trying to eyeball some trend lines, but I don't see any. Money line is the only one that's very notable. So yeah, I would say just watch the key zone. We lost the money line, bearish engulfing, increasing bear volume, but last time it happened, it bounced. As long as the key zone holds, I'm still going to be bullish. Ultimately, if we're to delete this. Oh, sure, let's make it bigger. Delete this. This is the wedge that we're in right now. Okay, we're seeing 1, 2, 3, 4 multiples. So 5, 6, call it whatever, 5 or 6 rejections from the upper trend line. 1, almost 2, 3. 3 supports from that key zone already. This is the descending wedge to watch on SOXX, which, SOXL, SOXS is going to be playing the same with direction once this starts moving. Next one is LABU. All-time low range. Oh, did I make? I think it made new all-time low, hey? By a cent, maybe? 1255, 1244. Previously was 1264. Okay, I don't like it. The reason is every time it makes a low, is making a new low. And one thing to watch for is every time your ticker makes low, you want it to see it make a higher low. Yeah. Right, this one is making, so 1264 was previous all-time low, and it became 1255, and it became 1244, and there is a clear upper trend line that's guiding it down. Two rejections already. You could even call there's another 4-hour upper trend line somewhere. Let's see how this works. 4 hours. 4-hour upper trend line over here. Rejection. Yeah. Even 4 hours, there is another trend line here. So this would be a little bit more earlier sign for you to get into bullish if you want to play bullish on this LABU. This inner 4-hour trend line instead, it will give you a little bit more early signal. But the key to watch is going to be this one. Multiple rejections, and there is so many resistance to the upside. I mean, it is ultimately a very low risk, nice bottom fish area. We did see 2 bounces from that all-time low, right? Ultimately, we did not close under it, so those are good signs. If you want to play bottom fish, yeah, that'd be a good area, right around 1244. Just make sure to put a stop under. Make sure you know where your risk is, how much you're willing to risk on it for this bottom fish. It's not something that you want to. It's always going to be harder to play counter trend, right? TNA. Now we're not gonna talk about TNA. We're gonna talk about Rus instead, because that is the underlying asset. So with Rus, it's been a long time since we looked at Rus, eh? Looks like a monthly bear flag to me. Oh yeah, monthly bear flag with some decent lower wicks forming though. And also a weekly bear flag. So monthly bear flag, weekly bear flag. Increased momentum selling somewhat. No, decreasing momentum selling. Right. So this is the key trend line to be watching. This is the short-term trend line to be watching. We're gonna need to get over that trend line. I like the bounces. It's very similar to LABU actually. You know, it made new low, but it no follow through. So as long as this key zone holds, that's gonna be your bottom fish area. Next one, TSM. We discussed Google already, so let's take a look at TSM. Taiwan Semiconductors. Ooh, what a fake out. Whoa. This is reminding me, you know what this is reminding me of? Amazon. Look at this chart. How similar is that? Right, it goes sideways, 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 break, come down. Break, boom. Sideways, 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 break, boom. That is very similar chart. So what is Amazon doing now then? Because of that news with this potentially bottoming out, okay. TSM, there could be news coming out then. Hey, one thing could save this. News coming out. How much did it run? So 42 all the way up to 145. That is 3 times. 350, 3.5 times. So 225% return at somewhere around 250% return. Yeah, so three and a half. 250% return. Now that what I want to do on this chart is draw a fib all the way down from the pandemic low. Couple of things I want to make sure before going whether if I'm bullish or not. I'm not in this ticker, but a couple of things I want to. Ooh, okay, yeah, that does. So one thing is with how much it has ran, it makes me without seeing any resistances. Okay, the only thing that I saw on the weekly here is a weekly bull flag, touch weekly 8, boom again. It never touched that weekly 8 again. Okay, so this is a chart that has run so much to the upside so fast. I would anticipate that there's going to be, because now that we've lost the key zone, I would anticipate that there's going to be dragged out consolidation. And there was one thing I wanted to confirm before actually saying that, and that was the weekly bear divergence. So the weekly 142.20 that was the previous high, and then the new high was 145 even, topped out 145, right? And then this is now a strong weekly bear divergence. Strong weekly bear divergence. Look at the RSI, right? At the very, very, very minimum, I would anticipate a drop down to the 0.5. GP makes the most sense where the previous resistances are. So, you know, it's I sort of want to, makes me sort of want to short it. Man, seriously, as you get older, I think allergy starts developing or something. I've never been allergic to anything, and lately I've just been getting stuffy nose day after day kind of thing. I don't know if I want to set an alert over here. Maybe over here. Yeah, okay, that makes sense. Just, yeah. There's a news over here, hey? Huge gap down. So now that I'm looking at it, SOXX, now because of this, it might impact how SOXX trades. So moving the upper alert to over here, in case it does bull break, then there's going to be a gap fill play. Moving the lower alert to just below that previous low. This is a significant grind down from here. It reminds me of Ford kind of play, which is interesting because I would have anticipated semis to be a little bit more bullish. So the daily action could probably be drawn a little bit different because I don't like that one. Yeah, that looks good. So that's the upper trend line that must break. And it looks like there's actually a lower trend line as well. Developing. We will call it developing lower trend line. Somewhere around here. So this is a descending wedge. Oh, this could really drag out. This is a descending wedge. Let's draw it as a wedge instead, so that it's gonna be very clear. Right around there. So when we look at it, you know, it makes we can see something like this before an actual bounce, right? The chances are, we don't know. You gotta see if the market bounces, this is gonna be a bounce, right? But as of right now, the pattern is a descending wedge right now on TSM. Next one, Google, we already discussed. Next one is XME. Couple more tickers to go. Make it a long weekend video. See, hope you guys don't miss this because I do not want to be doing long weekend videos. XME looks the same as it actually looks stronger than oil. I was gonna say same as oil, but it does not. It looks stronger than oil. Where's that oil chart? Top out, come back down. XME looks stronger. Yeah, much stronger. 88 bounce. Woo! There is. RSI is showing weakness though. So there's no actual bear divergence, but RSI is showing weakness coming in. You know, RSI is making new lows while the chart is holding up, trying to make a bull flag. While, you know, comparing it to back here, this daily bull flag, RSI was not making new lows. This is RSI is showing a little bit of a curl sign. We did see a rejection from that top of the key zone. Where was it drawn from? I think, yeah, I remember having to go all the way back here to draw it last time you requested it, which is great. No complaints. I love drawing new charts. Right, so looking at this, you know, multiple rejections. 1 over here, 2 over here, 3 over here. So lots of previous rejections. And wait, no, that's not even the one. That's the next key zone up, by the way. So this is the previous one. 1, 2, 3, 4. 4 rejections from that area. And now we're seeing another rejection from that area, potential rejection. We don't know yet because it's still just in a daily bull flag. This is a little bit more pullback than ideal bull flag, but we are potentially seeing a confirmation already. You're gonna need to see that follow through, break the upper part of the key zone. Aside from that, no red flags. You know, short-term guide, you can use either the daily 8, clear bounce over here on the daily 8, right? Either use the daily 8 or you could just use this lower trend line. This is a very nice increased momentum on the price action. So even if you to use this lower trend line over here, you know, you might give, depending on what your entry is, of course. If your entry is from back here, you gotta keep it at a tight stop. Use that daily 8. If your entry is all the way from somewhere back down here, this lower trend line is okay. You know, even if you lose it, say over here, right? That would still be a very decent gain, but the reason why you want to use a lower trend line more ideal is if we come back down again, boom, can be another leg up, right? So XME, no significant red flags as of right now. Just watching the RSI is a little bit more concerning, but there's no bear volume. Look at all these volume, right? Next one, last one, Coca-Cola. I don't think we've taken a look at this chart for a long time. Yes. Oh man, there's no key zones. Look at the trend line, it's yellow. That's like year, 2 years since I've used yellow trend lines. I'm seeing a channel, so trying to get the point. The point drawn. Okay, this might be a little bit harder on the daily, so let's use weekly. Is it a channel or is it a wedge? It's looks a little bit more like a channel to me. So, oh, wrong one. So if we were to use, I don't know which low I want to use. Let's say that one. Not too clear of a channel, hey? Okay, so we did see some resistance. So let's take a look. Oh, whoa! What's with that bear action? Last few days. Yo! Is that news? That is very significant comparing to the market. breakout, fake out on the channel now for sure. You know, because of this being a daily, what I want to do over here is I do see. Oh, come on. Oh, come on. It just won't go to. There we go. Does that make sense? Yeah, it does. So it's range bound channel. I don't think I've ever seen. Yeah, I've never drawn it like this before. I don't like how low this is though. What if we draw it to like up over here? That still makes sense. Look at that rejection. Look at that rejection. Yeah, it's range bound rising channel. Yeah, this is very clear now. Let's draw this a little bit further back. And then maybe topping this top part out a little bit more. And then topping this part out a little bit more. How does that look? Yeah? Top out. Top out. Oh, it doesn't line up here anymore. So the previous one worked better. Okay. Okay. This one. Wait. No, that's a big one. We want a skinny one. There we go. Alright, so this one works better. Yeah, so this is a rising channel with very clear two zones. The upper trend zone, the lower trend zone. Breakout, fake out now. Continuation to the downside. If we were to draw a fib from here. Get to the point, man. How come my mouse is not working with me today? Platinum. I'm not too sure. So the one thing with this is I haven't looked at Coca-Cola obviously too much, so I don't know if it reacts to platinum or it reacts to GP. You could what I would suggest if this a ticker that you're watching very closely is suggest you that go back, you know, test it out. So you draw from the low from back here and then draw to the high for somewhere double top over here. Yeah, that's double top. 57.56 double top. So you just draw it to that point and then see if it reacts to GP more or it reacts to platinum more. So if we just drag this out, neither. 0.5. Yeah, that is so interesting. Blue chips don't usually disrespect fibs. That is so interesting. Let's draw another one over here. So let's draw the pandemic first. We're gonna draw a bunch of fibs. Now I'm actually kind of interested to see what it actually reacts to. Why? It always loses the fib ever so slightly, and then okay, so one thing I forgot to mention about the fibs is if you're drawing from the low to the high, you know, depending on where your high to the low to the high is, all those middle part, you can't call this a GP reaction. You can't call this a GP reaction because your measuring portion, that beginning part is right here. The beginning point is right here. The end point is right here. You can't say that middle part, okay, is reacting to GP. You can only use it going forward. All right. So that means going forward, we lost a 0.5 before bouncing. We lost a 0.5 over here before bouncing. That is so interesting. So there looks like with Coca-Cola itself, there is another level somewhere in between 0.5 and GP. Somewhere over here. Yeah, it's not a chart. Maybe that's why I never traded Coca-Cola. Looking at the chart, you know, if that's the case, it does not react to platinum. If that's the case, then hey, it does line up with the previous high. It's gonna be around 57. That previous high back test, it's gonna be right around there. Just the loss of the 0.5 might actually work. So keep an eye on this price action right around 57. Aside from that, that's it for today's video. Just to do a quick recap. Top pick would be Amazon, followed by, I want to say Google, and then Apple, Microsoft. All right, so that's it for this week's long extended weekly stock pick video. Thank you guys for watching. If you know anyone that may benefit from the content we share, please consider sharing our channel with them. Thank you for tuning in. I will see you guys in the next video.